So we're watching ARM.
Yep.
We're waiting for the first trade. Why is this market sort of yet again kind of able to brush off a bit of a hotter read on inflation? Is it because it's not enough to upset what the current story is regarding the Fed?
Well, I feel like this market in general is teetering back and forth, Scott, between good news being good news and good news being bad news. And today is a day in which good news is good news. I mean, the hot retail sales number, the jobless claims, which show that the consumer is in good shape. The consumer has jobs and he's consuming. It's good for the economy. Of course, that's worrisome for inflation. And the PPI number, while hotter than expected, when you look at those year-over-year numbers, they have 1 and 2 handles. So, it's hard to get really exercised about that. But I think ultimately where we are right now, we came into the month of September worried about the consumer, right? We had an uptick in unemployment on the August labor report. We had a lot of talk about delinquencies. We had those horrible retail reports last month. And so the fact that we're getting a sign that the consumer is healthy, I think the market wants that. And if the Fed hops on one more interest rate hike, I don't think they will. But if they do, I don't think that's the feather that breaks the camel's back. Maybe it is, but I just don't think so. I don't think the market thinks so.
Jason, PPI hotter, retail stronger, jobless claims lower, oil above 90 for the first time this year.
Yep.
That's something to keep an eye on as well before we get along to this big IPO that we're everybody seemingly is talking about.
Yeah, no, 100%. And I think what Jim said is spot on. I think for me, though, as it relates to the headline CPI numbers yesterday, PPI today, we were expecting energy to be up. Energy was up 5.6%. Gasoline was up a little over 10%. So I think that played into, obviously, the headline numbers on both PPI and CPI. Not enough to change what the Fed is going to do. The Fed is likely not going to move in September. The November meeting is somewhat in business, right? And then the December meeting, I think, is not going to, there's not going to be a move there. So I think not much change there, and I do agree with Jim in terms of the consumer, the resiliency of the consumer. The consumer is still strong. Claims were lower. Continuing claims were also lower. So I think that is what the market is needing to move forward.
Weiss, resilient market, huh? I mean, there's been a million reasons why this market could not be where it is, and yet for some reason it is. Maybe it's because we think the Fed is closer to the end. We think that earnings have troughed and they're going to start rising up. We're not too optimistic about where we are. Oil at 90, is it sustainable? I don't know. But what do you make of the resiliency that we've been witnessing?
Well, it's kind of fascinating, particularly today and yesterday as well, when you had a little bit of a hotter number than what the market was looking for. And the bond market's taking it pretty seriously. As you mentioned, yields are up across the curve. I'm looking at the 10-year up, 31 bips. You wouldn't expect the market to also be up as aggressively as it is. So I think the market is taking the Fed at its word, which is that, oil, energy prices, food prices, they are transitory. And if you go into the core and you go through the core, you'll see that a lot of that, or some of that, actually is showing inflation coming down, while some of the inputs, like retail, for example, are higher because of energy prices. So the market's still in the consolidation phase.
All right, we'll get back to Weiss in a moment. But Amy Raskin, I noticed a number of moves that you've made, pretty active in this marketplace. I wonder what it says. You add to Vertex, you add to Verizon and CVS. American Electric Power. Add to Snowflake, too. That's an interesting one out of the software space, thinking about what's going on in the cloud, what Oracle delivered. That stock was way off. Why Snowflake? Tell me about that one first. That jumps out to me.
Well, it does, because the other trades are more defensive, but we're still thematic investors. We're still long-term investors. We think Snowflake has a good run in front of it on a multi-year basis. It's not a quarter call. They've had a couple quarters where the stock has traded down a lot, similar to what we saw with Oracle. So we think, obviously the valuation's expensive, but just looking at it in total as a $54 billion market cap company, we think over time it's well positioned and it's going to be a lot bigger. So the stock hasn't gone up as much as earnings have gone up. It's kind of underperformed the rest of tech this year, so we're just being a little opportunistic there. It's not a huge position for us in full disclosure.